Okay, folks, welcome to this week's Fife Property Update. This is the property market from the 28th of August to the 3rd of September yesterday. This looks at every single property across the Fife market. It has come on with an estate agent via Rightmove and also sold with an estate agent via Rightmove as well. This gives us a good indication about where the property market is for last week, the weeks before, and the coming weeks to come as well. It gives a good idea of forecasting and extrapolation to see where we're going to be as well, taking all the other factors into account at this point in time, and gives us a real good indication about what we should also be offering over the home report, or maybe at the home report value, or possibly even below home report value, depending on where it is just now. So let's go through some of the numbers straight away and kick off here. Okay, so this is the weekly figures. We're going to go on the monthly as well for August itself, and again we'll see August in its entirety. So this was last week. So in the Cooper area, 15 properties came on and 9 properties actually sold. Now, when 15 come on and 9 sell in a single week, it really is an oversupply when you look at it. So technically you're competing against other properties when they're coming on, because it's not one on, one sold. So there's an oversupply in that situation. But if you're looking at it on several weeks and behind that, and also maybe a month as well, like we'll look at just now, it'll give us a strong indication. So while in the Cooper area we see an oversupply for that 1 week, it's possible that other weeks were an undersupply, and therefore more demand. Now we'll talk about that in a minute, about what more demand means as well. So East Neuk, 6 properties come on. Actually, nothing sold in the East Neuk area in last week. That tells you a lot about the East Neuk area. But only in a week, remember. A week does not make a trend. One of my former bosses from my manufacturing days as an accountant actually told me that. Week doesn't make a trend, Jim. You've got to look at it in several weeks before as well, and take that into account. And see where it goes from there. So St Andrews, 9 properties came on, 6 actually sold. Leavenmouth, 17 versus 12. Dunfermline, 58 versus 59. So Dunfermline the previous week was actually an oversupply, but you can see that's leveling out a bit now. Glenorchy, 17 versus 12. Kirkcaldy, 28 versus 34. Kirkcaldy was the same last week as well, when oversupply. Now it's the other way around. So see how it shows you a week doesn't make a trend. If you take two into account, it kind of levels it off. But you can see 150 properties came on last week and 132 properties went under offer and sold. Now, that's quite consistent every single week. What it does tell us, though, this 132, it has always been about 120 and 130 for the last 5 or 6 months. So it tells me consistently that the demand is there at that level, and demand hasn't really dropped, even though Rightmove and Zoopla are putting out reports saying demand has dropped on their website. It doesn't mean to say demand has dropped in the number of properties being sold. It just means that's unique to their website. So if we look at the numbers here, it's almost the same every single week. So the demand's always the same. What has happened here, though, is supply has gone up substantially. So supply has gone up by about 20. So 20 divided by the 132, supply has gone up about 15% on that week, over and above what's actually been sold. So it's 15% more come on what's been sold, and that's quite normal. Remember, this has gone from a seller's market, which is a 90% seller's market, 10% buyer's market. So in other words, everything's on the seller's side, to roughly probably about a 60% seller's market to 40% buyer's market. So it's becoming to level off now because there's more properties coming on. We'll look at properties that we've got coming on as well. We'll be talking about that. But let's look at the monthly figure for August. This will give us a good indication about where things are overall. So you can see there in the month of August, in the Cooper area, 57 properties came on, 38 properties sold, so 67%. So there's a huge amount of properties coming into the Cooper area now. Now remember, this is on the back of lack of supply. And I'll talk about that in a minute, about lack of supply and what's happening here. East Neuk. See, now we had talked about in the week just past, East Neuk, 6 properties came on, 0 properties actually sold in the week. But look at the month before, 26 came on, 27 sold. So it was leveled off completely, and yet it was up and down every single week in the month of August. St Andrews, 34 properties came on, 28 sold. Leadmouth, 72 versus 53. It's the first time Leadmouth actually had an oversupply in a long time, but I'll tell you why that is. 309 versus 273 for Dunfermline, and 79 versus 64 for Glenrothes. Again, it's the first time in a long time that Glenrothes has more supply than there is actually being bought. Kirkcaldy, 136 versus 104, again, that way around. So you can see the 500, I usually talk about this every single week. If you looked back, all the other broadcasts I've done since the beginning of January, every single month I've reported on, it's round about 500 to 550 or thereabouts. So it's quite normal, that figure, the 587 sold. So that is not a drop in the number of properties being sold. And in the UK, it's the same similar picture. I've been putting on graphs about the UK, the whole UK market, showing every single week recently, from week on week, the number of properties actually being sold right across the UK is consistently the same every single week, if not just a wee bit more. So the demand is always there. Now, the key here is what's happening is this figure, the 713, is driven out of the stalemate. So what's happened here? What I talk about the stalemate. For months upon months upon months, we've had a restriction in the supply coming onto the market. And we've been calling it the property stalemate. It's like a log jam or a traffic jam. It's where everybody's stopped and they've stopped making a decision to put their house in the market. And that's caused the demand. The demand has always been there, remember. That demand is then looking at fewer properties. Therefore, these fewer properties that are currently on just now are going quicker and selling quicker for larger prices. Simple supply and demand is economics. But as more supply comes on, because people are now making decisions saying, look, if I'm going to sell in the next months, and I'm telling people that as well, if you're thinking about selling in the next 6 months or even a year, you're probably better doing it right now. Because in the next 6 months to a year, we won't have certainty about what's going to happen here. And there's a cost of living crisis on just now as well. So that's why you'd be better to go there now. And this is why this number for the number of properties coming on is a lot higher than usual. What is also happening as well is the people that were in the stalemate, that in this log jam, they were thinking, well, I'm going to wait till the right property comes on before I put my property on, they're now in a position to say, well, wait a minute, actually, these properties are actually coming on that I'm after now, so therefore I'm going to put my property on. And that's where this oversupply is coming on from right now. It's the people that are actually making the decision to get on with it right now rather than actually wait 6 months or a year. And it's also the people actually seeing the property they want now and saying, I better put my house on now as well. So we've now become to a relaxation of this logjam, and it's actually just going straight through now. And there's more and more coming on. This is actually quite important as well. Well, I'll just stop that and I'll share the Zoopla statistics. Let's look at Zoopla itself. I'm just going to get their website up. Zoopla.co.uk. Now, what I'm going to do with Zoopla, I'm going to share that screen actually so you can see it. If I can find them. Zoopla, hopefully that's it there. Hopefully you can see that. Let's click on Zoopla. Now, what we're going to do with Zoopla is we're going to look at the number of properties. Now, back about 6 months ago, about maybe 4 months ago, we were sitting at about 550 properties right across Fife up for sale. And that's all that was available. Now, this gives you a good indication about, is this oversupply issue coming to fruition? Is this actually happening? I mean, we've seen the numbers weekly and we've witnessed them, but does this back up what we're saying or what I'm saying? So I go into Fife and type in Fife, and we're looking at 550 maybe 3 or 4 months ago. So what is it now? We are sitting at 741 available right across Fife. Now, if I take 741 and minus the 550, I get 164 divided by the 550. It now becomes 30%. So 30% more property than there was before 3 or 4 months ago on the market available for sale. Now, simple supply and demand economics, when there's more for sale and the demand's still the same, it means people have more to choose from. It means sellers don't have as much clout or influence on what price the buyer would be prepared to pay, because they've got more choice available now. You know, and see what's happening about energy prices. It's a similar situation. The lack of energy, the lack of gas, the lack of oil, the lack of electricity pushes the prices up. So the more supply of properties coming on brings the prices down. Now, I'm not saying there's going to be a price crash, by the way, because there's probably certainly not. And watch out for that article I've written for the Courier. That'll be out soon in the next couple of weeks in the Courier online. Possibly it might be in the mainstream Courier as well. But I've written an article to them because they've asked me for an update on the property market across Fife and where I see it in the next 6 months to a year. And do I see any indications in any indicators that actually suggest and back up what I'm saying? And that's what I've done for them. But what I'm saying to you is there's oversupply, and that's what's causing the so what you should be expecting now is maybe 6 months ago, maybe a year ago, we were talking about, we're looking at 20 and 30% over the home report value now. But now that's not going to be the case, because what's happened is all these prices that have come through with 20 and 30% over the home report value have now provided evidence for new home reports to be made at these prices. So the value of property have gone up, therefore the home report's gone up. So therefore the home report value offers over figure. You should be expecting probably to offer a lot less than that 20 to 30%. I would say probably around about 10% more than the home report value, possibly more if you really want the property, because if you're bidding against someone else, remember, I don't know what they're going to bid, so you have to decide for yourself if you're bidding against somebody else or if you really want that property. And if you're going to stay in it for the long term, does it really matter if you pay a bit more for that property? Because then it levels itself out over all the years. A classic example is if you pay 20,000 more for a property and you're going to live in it for 20 years, then it's only £1,000 a year really in the scope of things. And as time passes and £1,000 a year, that £1,000 gets less and less and devalued because of inflation. Therefore, the 20,000 that you're paying now over the years is a lot less than what it is, but the property actually accumulates in value more. Therefore, you get more value from the property with the 20,000 you put in at the beginning. Indexation, compounding wealth. We talk about this. We will be talking about that on our show tomorrow, the Wealth Creation Show at 12:30 live, about assets and liabilities and what is the difference and when is an asset a liability and when is a liability an asset. Work that one out. A debt could actually be an asset. Wow. It goes against the normal realms of accountancy. That's my background. But I've actually learnt this, and we're going to teach that tomorrow and tell everybody all about what that actually means tomorrow in our Wealth Creation Show. So, as I said, oversupply coming on right now. That's possibly going to peter off as more and more people, then it all goes through, and then it starts to slow down again going into the winter periods, because less and less people probably put their house in the market. So we'll see what happens with that over the next 2 or 3 months, and the next quarter, and the next 6 months as well, coming into the winter period. We're just going into autumn right now. Put our autumn campaign on. You've probably seen that coming up on your feed as well. Let's pop back to this other one we had talked about. I'll share the screen again. Look at the monthly figures, as I said from before, that we were on. And as I said, I'd covered this about the 713 versus the 578. But remember, I said 30% oversupply from 3 or 4 months ago, and yet this one here, the month on month, is actually right here is only a 15% oversupply. So it's been compounding over the period. Every couple of months, it's been adding on and adding on. So you're getting this add-on every single month, and then it's not, the demand is all still there, but it's the same as before. So that makes the difference. Let's talk about what's coming onto the market and what's sold. Firstly, let's talk about what's sold with us last week. Now, we had a couple of properties sold. The reason that we tell you what these properties are when we've sold them is it gives you a good indication of what the value of that property was, and what type of property that was and what area that property is in. So if you have a similar property in that area, then you'll know roughly where that the value of that property is without actually having to guess and get your opinion and think, well, where was I before and what did I buy it for? A lot of people have been sitting for the last maybe 5 or 6 years or maybe even 15 years thinking, what's the value of my house now? And they've tried a couple of, instant online valuation tools and stuff like that. And it's, it's maybe not giving them the answer they wanted. And they've maybe not had an estate agent out to have a chat with. You should always have an estate agent out to get a chat with, because they can give you the facts and give you the true valuation of your property. Even though you're not selling right now, it still gives you the facts and information to make a decision on facts rather than just an opinion. Because, opinions, everybody's got them. I usually say even idiots. Okay, let's talk about Links Place in Leven. So this one was sold last week. Now, this was on for 2 weeks, and it was a 3-bedroom terraced house near to the beach and that. This was listed at offers over £175,000. So these are going significantly more from what they went for before. I remember what that was sold for and how much money has been spent on it, invested in it to make it the standard it is today. But these are selling at offers over 175 right now, and it's sold. Links, 16 Crescent Road in London Links, that is actually sold. Now, this was sold at a closing date. This was quite an interesting one because this was on for quite a while, and everybody was going, how come that one's no sold? And can I see this property? We had a bit of confusion with the seller and getting access and all the rest of it back and forward. But we had a really good demand for these types of properties. You know that yourself as well, because we sold Victoria Road, just in the road, at offers over 350,000, and that was sold within a matter of days. And this one was just up the road from it, and again that was sold at a closing date, and this was on at offers over £285,000. Now, 2 other people missed out on this property. So if you have a property like this traditional Victorian build, this is probably built round about late 1800s, early 1900s. Typically, because you can see the stonework and the way it's all been featured and its design. And you'll probably traditionally walk into that front door and you'll see the traditional tiling on the front vestibule as well, the lobby. And that'll give the game away straight away when it was roughly built, because it was the same similar type of tile they put in every single house of that type and that style, and in that area, and also in the Leadmouth area and East Links and that as well, and these types of properties, because they're all similar stonework and period of property. So 16 Crescent Road in London Links was actually sold at a closing date, offers over 285,000. It needed a bit of work on it, by the way. So if you've got a pristine property, it's probably going to be a bit more than that. And 2 other people missed out on this. So it is popular, these types of properties. If you're ready to go, contact us now. We can give a really good, accurate valuation of your property. But as I said, we've always got the instant valuation tool on here. Let me remove that. We've always got our instant valuation tool on there for you, so you can get a quick instant valuation. Now, it is not like Zoopla's instant valuation. Zoopla's instant valuation is all over the place. Because I remember when I got my house valued by the Clydesdale Bank, when they were due to, review my mortgage, and they said, well, your house is only worth, well, they actually said my house is only worth half of what it was worth. And I said, well, that can't be right, because, it's a lot bigger than all the house in it. But we've taken into account, that's what Zoopla's tool does. It takes into account all this house in the street, and it just gives you an average of all the houses in the street. So if you've got flats in the same street as your house, then that's obviously going to pull down the value. So that doesn't work. So our instant valuation tool is more accurate, and it actually doesn't take these properties into account, and it actually focuses on the exact type of property to give you a more accurate valuation. But it also gives you 3 different valuation levels. It gives you a rental valuation as well on the 3 different levels. And I'm not going to bore you to tears with that, because I've spoken about them time and time again every single week, what the 3 valuation levels are. So you can watch one of the previous shows, and let's crack on. Let's look at what's coming soon. Just firstly, before I say what's coming soon, if you've got any questions, guys, please feel free to ask me them. If I can answer them live, I'll answer them live. If I've got to do a wee bit of digging, I'll come back if you put them in the comments, and I'll come back and mention it in the comments later on. So I don't need to bring it on the screen and answer it live. I can just probably catch up later on once I get the information and just reply to you, either personally through a private message, or I can just reply to you in the comments if it's something that everybody else will be helped by as well with what you've asked. Let's talk about a couple of things. If you're an investor landlord, this was a really great show. I mean, I really give away a lot of my tips and information that I've learned over all these years of being involved in property investing. I've been involved in property investing for 30 years. I'm probably one of the longest people in the investment market for property in the whole of the UK. So I've seen a bit, I've experienced a bit, I've learned from a lot of successful people who have come and gone, But I've learned a lot of things, and I've passed that knowledge on every single time when we do investment workshops for people. And so we talked about thrifty landlord tips, how to slash your upfront costs when you buy a rental property. Now, this is actually quite a good one. We actually talk about don't get married just now, but watch the show. So don't panic for people that are thinking about getting married. Don't get jittery about it, but watch the show and you'll understand why, if you're thinking about investing in property, why you shouldn't get married right now until you do this and what we had mentioned in the show, or listen to the podcast as well. Find a fixer-upper is a really good one to actually get yourself in a position where possibly you might actually have an infinite return. So you've got no money in the property once you actually fix it up and remortgage it and get all the money back out. So it's an infinite return because your return on your money is infinite because you don't have any money in it and you're still making money in it and you've still got the property and it's still accumulating in value. Work that one out. What do you get in the bank? Oh, it's 0.2%. So if you're getting an infinite return, that's a pretty good deal in comparison. So we talk about it in there as well. We also talk about forget what's in vogue. When you're doing property investment, don't go for the most modern thing. It's like, oh, purple kitchens are all the rage this year. That's not the thing to put in because it's only there for probably a couple of years. Your kitchen should last you a lot longer. And people in 3 or 4 years' time maybe don't want the purple kitchen anymore. And then that's when you have to change it again. So we talk about what type of kitchens you should be putting in, what type of bathrooms, what fittings, how you decorate it, how you carpet it, in order to make it nice and perfect for someone that's moving in for the first time. Turning your home into a buy-to-let. Also, we talk about the tax advantages. If you've lived in your home before and you're looking to let it now, there's huge tax advantages to that on principal private residence on buy-to-let. And I've put a link in that post. In the actual show itself, you can actually get that information from the Inland Revenue. And actually, a wee trick as well, if you're just going to start out for the first time, if you're a higher rate payer, you probably want to look at a limited company to do your property investment. And we talk about the reasons why, and we talk also about the reasons why you should possibly buy an existing limited company. So it makes it nice and efficient and easy to set up for you as well. That's that show that we talked about yesterday. So it's available in the show. So we'll do an hour-long show. Richard and I, we talked about this. You can read the article as well on this post. Just click on the link, or you could just listen to the podcast. More than happy for you to do that. Again, it's all a wealth of information you could glean on and learn from in order to help you in your property investment career. As well as the one as well, I'm going to quickly skim over that. It's a kind of topical thing. We do a midweek show. We talk about the topic of the week is why is Liz Truss and Rishi Sunak not actually quoting the Fife generation rent people? And we talk about that in that midweek show. There's an article in there as well. You can read that as why they're not doing that, and our comments to why that is as well, and why it should be, and why they should be taking into account the Fife generation rent. Instantly as well, there's actually 1,220 less properties for rent available in the stock of Fife over the last 5 years. So when people say a lot more people are buying properties to rent in Fife, they're not. It's actually gone down 1,220 in the last 5 years. The number of owner-occupiers, though, has gone up about 8,000 in the last 5 years, which is great news. So there's more owner-occupiers in Fife. There's less private landlords in Fife. So that's got to be a good thing for some people. So, again, this is what I keep saying. It's facts base your opinion on, not what you hear from someone else saying that all these private landlords are buying all these properties. But that's not the case, because the facts and the statistics suggest otherwise. Completely different story. So that's quite a good article as well to watch. Let's talk about what's coming onto the market that we've just signed up. Okay, hold tight. Kelsey House in Achtermachte, 2-bedroom upper apartment is going to be coming on. Cadham House in Glenrothes. Now, this is a cracking wee apartment. This is a 1-bedroom apartment in a great location. I've seen inside it, well, a property tour already, so I've seen it. So this will be getting launched. I think Jimmy just launched it on Friday, just past. So 2 days ago, Jimmy was on and he'd done a pre-portal launch. So if you're wanting a 1-bedroom apartment in Glenrothes, and Cadham House is actually quite a nice property. It's a period property, Victorian style. So it actually might be quite good. So if that's the type of thing you're wanting, watch that. Look back the Glenrothes page for Fife Properties. So in other words, Facebook, Fife Properties Glenrothes, look up, and then you'll get the pre-portal launch for that one on that page. We've got pages for each area. So Fife Properties Glenrothes, Fife Properties Kirkcaldy, Fife Properties East Nuke, Fife Properties Cooper, Fife Properties St Andrews, Fife Properties Dunfermline. And so we've got all these different areas individually on Facebook pages. So if it's a property you're looking for in a particular area, region, we just mentioned there, go to the Fife Properties page for that region and follow that page. You don't need to like it. Just follow it. Because when we go and upload a property on a pre-portal, which is before it goes on websites, you have an opportunity to see it way before anyone else, 4 or 5 days before anyone else, when they're looking for websites. And you could have an opportunity to possibly get more information or jump in before anyone else, or get your ducks in a row to make an offer, which is a great opportunity, especially if it's your dream home. What would you do for your dream home? Well, it's as simple as that. Just follow the Facebook page and you'll get to see these properties. Wellesley Road, Methil, 2-bedroom end terraced house is coming on. Green Loanings in Kirkcaldy, that's a 2-bedroom terraced house will be coming on. Main Street in Springfield, just outside Cooper, that's a 4-bedroom house that's going to be coming on. King David Street in St Monans, a 1-bedroom apartment is going to be coming on. Cooper Road in Leven, that's a 6-bedroom detached house. Wait till you see this one. This is a cracker. Cooper Road in Leven, a 6-bedroom detached house will be coming on. West 4th Street in Cellardyke, this is a 3-bedroom detached house. It's going to be coming on as well. So watch out for these properties. I've been out to a lot more properties in the area. Exciting stuff. There's properties actually coming on. I mean, especially, I'll tell you what, the West 4th Street, we've just sold James Street for just under about $500,000 that was on it. But this property is wow. This has got amazing views on the upper balcony, just as you walk out and you sit there in a glass balustrade balcony, sipping your coffee in the morning, and you're just looking at 180 degrees right across the coastline. You can see everything right across to the May Isle. You can see across to Leith and Berwick, and you can see right across to you can see down at the Anstruther Lighthouse in the harbour as well. So it's a really good location, cracking location. So that's West 4th Street in Cellardyke. That's a 3-bedroom detached house, but it's a huge house in a prime plot, in a prime position, with a double garage as well. But watch out for that one. And that's what's coming on. So if you're interested in any of these properties, please feel free to message us direct about that particular property with your contact details. When we have more details, we will get in touch with you in the first instance anyway, just to get more information if we don't have you in our system. And then we'll tag you against that property. So when we're about to put this property on, we will tell you in advance that this one's going to get a pre-portal done. So you'll know about it before anyone else is ready to get the pre-portal done, so you can watch out for it and possibly be in a position to jump in before anyone else and get that prime property. Let me tell you finally about what's been concluded. Now, I talked about sold, and the reason I talked about sold is to give you an idea of what's selling right now and what value they're selling it right now. But what I'm going to tell you about now is what's actually been concluded. Now, concluded, when we talk about that, means keys handed over, money paid, houses exchanged. In other words, the person's ready to move in. We can now tell you when it's concluded the actual price that they went for these types of properties in the particular area. This really gives you a strong indication about what the price is you should be paying for in that area if it's that type of property you're looking for. So Main Street in Garbridge, this is a 1-bedroom upper apartment, and it's sold in a week for 7% over the home report value. So that gives you a good indication about what the percentages are for a particular type of property is going for. And it's sold for 123,000. So a 1-bedroom apartment in Main Street in Garbridge was sold for 123,000. And that was in 1 week at 7% over the home report value. Upper Dalgairn in Cooper, that was a 3-bedroom semi-detached house. That was actually sold off market. Never even made it a pre-portal. Possibly put it on a pre-portal, but it was sold before then. And we possibly put it on the website, but it was sold before then as well. Again, this is why you register with us, because we do have some buyers that actually say to us, and some sellers, look, I maybe just want to, I don't really want to put it on the market. I know it sounds daft, and I don't believe in this, but some people say, look, you know, if you've got people already that potentially would want this type of property, and if you have, then I'd be more inclined to say, look, let's just go with that person right now, because the quick sale And I mean, the quick sale at the right price, by the way, is the more important to them than actually trying to wait for a period of time in the open market to see if someone else is going to jump in at a higher value. So everybody's got their price, and that's what sometimes off-market deals are. And they've got the price that they want. If somebody's prepared to pay that, job's done, deal's done, and it's out. Never hits the websites, never hits the social media either. That's why it's important to register with all your estate agents. Don't just rely on it coming on a website, because it could often be gone before then. Most people have actually told us about that story. They've gone for that reason. The final one, it was actually sold and keys handed over, is Toll Road in Cellardite. Now, this was a hugely popular property. 3 other people actually missed out on this when they were trying to offer on it. And one person got over the line and they got that property. They have now moved into it. There's a 4-bedroom end terraced house in Toll Road in Cellardite. It's sold for 15% over the home report value for £264,136. As I said, 3 other people missed out on it. So 4-bedroom end terraced houses are selling in Toll Road at £264,000 over the home report value, up to the top of Toll Road, which is on the Crail Road, by the way. So it's the nearer the top end rather than the bottom end. It's more the ex-local authority properties than the actual traditional Victorian villas, which are a different price point again, probably a lot higher than these types of properties. But these type of properties are actually selling for £264,000. Beautiful property inside. Once you've seen it, I think most people are actually seeing it anyway. And that's it, guys. Hopefully that's given you enough information about the market and where we're going with things, and how what you should be paying over the home report value potentially, and when you should be selling your property, by the way. Also get information. So if you've got any good information out of that, you think it might help someone else, then tag them in this post. After all, it will help. If it doesn't give them anything more than just a bit more information to get the fact that they need to make a decision, then it will do that for them. That's it in a nutshell. So you could tag them in the post, you could share the post with them as well, or you could make a comment, or you could like and share and all the rest of it. And more and more people see it as a result. The more information we can give out, the more ways we can help other people, and the more we can all help each other together. After all, a rising tide lifts all ships. And we're about to go into a big credit crunch or a cost of living crisis. If we're not in it just now, we all know about utility prices and that, and we need to help each other out on this occasion. And that's why more information we can give each other, the better we can make decisions on fact rather than just opinions. Okay, that's it. That's it for me, guys. Any more information, please feel free to comment after this. And until next week, it's bye-bye from me. Bye-bye. And I'll see you on the Wealth Creation Show at 12:30 tomorrow. Bye-bye.